Hey everyone, this is Nick Lump. This video is being recorded Thursday evening, July 31st, after the close of the stock market. And boy, was today an exciting day. The S&P 500 was down 2%. Small caps are down a little more than 2.25. You can see this large black bar here was today, big drop. And so I wanted to record this video. I'm sure anyone was, saw the news or saw that stocks were down quite a bit, probably wondering what's going on and if it's time to get nervous or not. So I'm going to record this to let you know my thoughts and show you what I'm seeing. And so today you can see this green line here in the middle. This is the middle of the channel that we've been in since the start of 2013. I'll zoom out real quick to show you. Starting from here, we've been just kind of chopping back and forth in this channel. And so we were sitting right on the middle line here, sliced right on through. And so I got a little excited at, first thing in the morning I saw we were breaking into a downtrend. And really this is the volatility that I was referring to in my last blog post. So I was kind of preparing for this over the past few weeks and raising a little bit of cash, selling some of our big winners. And so I was ready to do some buying, but I gotta say I looked across the board at most of the stocks that we own and did very, very little buying today. So not a lot of them were at levels or at prices that I thought were a good opportunity just yet. So only did a little bit of buying. Let's look at this on a weekly basis to see where I might actually think prices are more attractive. So this gray line that's standing out right here, this is the 20-week moving average, and you can see that it is held as support during this whole rally in this channel. And I point out this channel since the start of 2013 because this is when the third round of quantitative easing, or QE3, started, was back here. And ever since, we've been in this very low volatility, very tight range market, just kind of grinding in this channel. And every time we drop, this 20-week moving average has held as support each and every time. So that currently stands about a little less than 1% below where we currently are, as does the lower end of this channel, this lower green line here. So if we continue lower into here, I'll probably do a little bit of buying there. The other thing in the back of my mind is that this blue line is the 50-week moving average, and we haven't touched this since November of 2012. However, this also typically holds pretty well as support. And if we get down to this far, down here in 1830, 1840 in the S&P 500, I will be a much more aggressive buyer pretty much across the board, picking up more of just about everything we own, and especially the things that get knocked down quite a bit. So these are the two levels I'm looking at, just a little bit further here. And if we continue down, which would be another maybe 5% from where we're at, I'd be a big buyer there as well. So what I'm kind of thinking in the short term, though, is that we'll most likely see kind of a 1 to 2 day bounce, and then we could see another leg lower next week. This could kind of play out into the first or second week of August, and so it'll be interesting to see kind of what holds as support and where this pullback ends and the next leg higher begins. But all in all, not too much to be concerned about. We're still in this channel, and I still view these drops as good buying opportunities.